A 900-year-old religious order now issues passports to billionaires, and almost nobody knows why it's legal. Most people assume tax havens are islands. Cayman Islands, Bermuda, the British Virgin Islands, places where geography and colonial history collided to create legal gray zones. But that explanation breaks down the moment you look at one of the oldest and most peculiar tax structures on Earth, the Sovereign Military Order of Malta. It's not an island. It has no territory. Yet it issues passports, stamps documents, and grants the ultra-wealthy legal status that lets them move money across borders in ways ordinary citizens cannot. The order's origin story is straightforward. Founded around 1099 as a monastic hospital for crusaders in Jerusalem, it evolved into a military and naval power. By the 1500s, the knights controlled the island of Malta itself, minting coins and commanding one of the Mediterranean's most feared fleets. That territorial sovereignty was real, tangible, legally recognized. But in 1798, Napoleon seized Malta. The knights were displaced. They've had no territory since. For 2 centuries, the order drifted, exiled, diminished, operating from Rome on papal sufferance. By the 1960s, it seemed to be a museum piece, a relic of medieval Christendom with ceremonial robes and not much else. This is where the accepted narrative ends. The story told in history books is one of institutional decay. But that's precisely where the system began to work. In 1961, the order received something unexpected, official recognition from the United Nations. Not as a state, not as a nation, as a sovereign entity. It was a classification that existed nowhere else in international law. No territory, no population, no military, yet legally distinct from any country. That classification was the foundation. Everything that followed was simply the logical application of that status. Once you have sovereign status, certain mechanisms unlock automatically. The order can issue travel documents. It can establish diplomatic relations. It can open bank accounts in its own name. It can sign treaties. It occupies a palazzo in Rome, technically sovereign territory, with extraterritorial status. That's not special pleading. That's what sovereignty means. The system wasn't designed to hide money. The system was designed to recognize a medieval religious order, but the two turned out to be compatible. Here's where it gets specific. The order grants what's called a magisterial passport, a document recognized by certain jurisdictions as valid travel documentation. It's not a national passport. It doesn't grant citizenship, but it creates a legal identity separate from any state. If you hold one, you exist in international law as connected to a sovereign entity. That separation matters enormously when assets move across borders. Tax authorities track citizenship. They track residency. But a magisterial passport holder exists in a category the system wasn't built to monitor. The order also issues what it calls letters of nobility. These are formal documents granting titles, baron, count, knight. They carry no legal weight in most countries, but in certain jurisdictions, they establish a social and legal status that can be leveraged for specific purposes, opening accounts, establishing trusts, registering entities. The documents themselves are not illegal. The order has the sovereign right to issue them, but their utility depends on a peculiar fact. They exist in a gray zone between ceremonial and legal. The real leverage, though, comes from the order's diplomatic status. It maintains observer status at the United Nations. It holds diplomatic relations with over 100 countries. It has bilateral agreements. This means the order can function as an intermediary. It can establish foundations. It can create entities that claim diplomatic protection. Once an entity is connected to a sovereign body, certain financial reporting requirements become ambiguous. Who regulates a sovereign order's internal finances? The answer is, nobody clearly knows. This is the pivot point. The order isn't technically a tax haven. It doesn't advertise itself that way. It doesn't market secrecy. But the structure creates what we might call regulatory ambiguity, a space where normal rules don't apply because the entity exists outside normal categories. And in financial systems, ambiguity is valuable. It's not corruption. It's not technically illegal. It's the system working exactly as designed. But for purposes the designers didn't anticipate. By the 1980s and 1990s, the order became genuinely useful to people managing large fortunes. A billionaire could establish a foundation connected to the order. That foundation could hold assets. The order's sovereign status meant certain transparency requirements didn't apply. Banks in jurisdictions that recognized the order's status would open accounts. The money wasn't hidden, it was simply placed in a category the tax system had no mechanism to track. It was legal. It was documented. It was also effectively invisible. The order's client base reflects this. It attracted not criminals, but the globally mobile ultra-wealthy. Businessmen, diplomats, aristocrats, people whose assets crossed jurisdictions regularly. They needed documents that would be recognized in multiple countries. They needed legal status that didn't tie them to any single nation. The order provided exactly that. It wasn't marketed as a tax scheme. It was marketed as what it technically was: a sovereign entity offering legitimate diplomatic and legal services. The predictable consequence followed. As the order became known in wealth management circles, demand increased. The order needed revenue. It began charging substantial fees for passports, titles, and foundation status. A magisterial passport could cost tens of thousands of dollars. Nobility titles ran into six figures. Foundations required annual payments. The order transformed from a religious institution into a provider of legal status services. The mechanism was ancient. The application was entirely modern. Regulators eventually noticed. In the early 2000s, the Financial Action Task Force, the international body that sets anti-money laundering standards, began scrutinizing the order. They found no evidence of criminal activity, but they noted the structural vulnerability: an entity with sovereign status, minimal oversight, and significant financial flows. The FATF didn't ban the order. It couldn't, but it flagged the risk. This is crucial. The problem wasn't malfeasance. It was design. The order responded by implementing some transparency measures. It created boards. It published annual reports. It claimed to vet applicants. But the core structure remained unchanged. The order still issued documents. It still held sovereign status. It still existed in a regulatory category that no single nation could fully monitor. Transparency layered on top of structural ambiguity is still structural ambiguity. What makes this case instructive isn't that the order broke laws. It's that it revealed how tax structures work at the highest level. They're rarely designed explicitly to hide money. Instead, they're built on legitimate legal categories: sovereignty, diplomacy, religious status, that the financial system then exploits. The order didn't invent this pattern. It inherited it from 900 years of institutional existence. But modern wealth management found a use for it. The broader lesson: tax havens exist not because they're hidden, but because they're legal. The Cayman Islands didn't become a financial center through secrecy. It did so through regulatory choice, laws written to attract capital. The Order of Malta didn't invent a scheme. It simply occupied a legal space that happened to be useful. The system didn't fail. The system worked. It just worked for a very specific population. Today, the order operates more cautiously, aware it's under scrutiny. But it still issues documents. It still maintains sovereign status. It still functions as a provider of legal status services to the globally wealthy. The structure persists because it's legally defensible. The order isn't breaking international law. It's operating within it, in a space that law created but never fully closed. That's the curious case, not a hidden empire, but a visible one that the system simply wasn't built to see. Understanding how this works, how legitimacy and utility combine to create financial advantage, is essential to understanding modern wealth. The ultra-wealthy don't typically hide assets illegally. They move them through legal structures that ordinary people don't know exist. The Order of Malta is one example among thousands. It's instructive precisely because it's so openly documented, yet so widely unknown. The system works because it operates in plain sight. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe. We uncover a new mechanism of financial architecture every week. This video is for educational and informational purposes only and is not financial advice. Always do your own research.